File your returns today.
Uganda Revenue Authority. Developing Uganda together.
Kapo, you seem to be in a hurry. Where are you going to?
I'm gonna pay URA visit.
Why would anyone visit URA? Of all places?
To know more about the Kakasa business solutions, namely digital tracking solution, the voluntary disclosure program and electronic fiscal receipting, and invoicing solution, which have turned my business around. You know I need to be on top of my game to protect my empire. If you know, you know.
I too need to know what Kapo knows.
Kakasa, be sure you are in charge of your business. Uganda Revenue Authority, developing Uganda together.
Wait, Abu, tunamaliriza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't find it.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo! Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Kapo, awesome, yeah.
I began using URA's Kakasa solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure you are in charge of your business.
Uganda Revenue Authority. Developing Uganda together.
That's my little angel Rose. Together with millions of other children, my daughter Rose is assured of learning something new every day. Moses, my husband, just like many other commercial farmers, has his business supported so he can provide for us. When my other little one was on the way, even with my pregnancy complications, it was a quick, smooth ride to Mulago Specialized Women and Neonatal Hospital. Also, my new baby was able to make it through his first days with the help of specialized equipment thanks to the reliable electricity which has also been extended throughout the country. All this and more has been made possible because of you.
Join us and together let's do more for our country. Get your free tin at www.ura.go.ug.
Thank you for paying your taxes.
Uganda Revenue Authority. Developing Uganda together.
Mugasha, did you see the game last night?
I slept looking for a receipt. Up to now, I'm still looking for it.
What kind of receipt?
There is a certain receipt. I need to file my returns. I'm trying to find it.
By the way, do you know these guys of URA asked for 3 million from me?
Me, I paid 500,000 only.
You mean you pay only 500,000?
Yes.
They asked for 3 million. Why am I being asked to pay more?
I don't know.
You must know. We have the same level of capital, same rent, same premises. We even meet the same expenses. Why am I being taxed more?
I don't know. But for me, I sent my income and expenses via the URA website.
So they are punishing me because I did not send that through the website. Mugisha, you know these things. You know the type of expenses we go through here.
I know. But how will URA believe you if you don't write them down or keep records for your receipt as proof for your income and expenses for your butchery?
Mugisha, you mean you write all these things down?
Yes, I do. I write every detail. You see, the good, the amount, and the person involved.
But where do you get the time to write all this?
Immediately the transaction is done.
Good morning. On my way today to work, I noticed there are several new vocations going on, and I've discovered that all Ugandans have started finding a way of investing their money into different perspectives or into different things that they can get into to get maybe a side income or to have their future really covered up. Now, today, it's a very special event for us. We are going to discuss about the tax exemptions, the incentives that have been set apart by the government so that you and I, in some way or the other, we can have our money aside and have it planted into something that we really enjoy. My name, I'm Jotham Seranga, and I serve here at Uganda Revenue Authority in the Service Management Department under the Commissioner General's Office. And my goal today, I want it to be the best experience that you can ever have and the best experience in the knowledge that you will acquire throughout this webinar. Today, it is not so different from any other webinars. This one is special though, that I would like to give you a chance as my audience to send in any questions at any time you feel like, and please press the like button if you've enjoyed the webinar or if you're understanding and enjoying the webinar. The person that we are having today that is going to really put us through the cracks and through everything that we want to know today, she has been dealing in policy changes under the Domestic Taxes Department. She's a lawyer. She's a mom, I must say. And she has been around this environment for now a decade, I do understand. And I believe we have the right person to explain to us what's really going on. And she's Judith Akelo. You're most welcome.
Thank you.
One of the things that I always think about if I have my little saving is how can I invest and what can I invest in? Judith, it's Judith, I'm sorry. Judith Tracy Akelo. What's in your mind and what do you think about the investment environment in Uganda? And what do you feel that the taxpayer can really get involved in or they can wrap their minds around?
I think the investment environment in Uganda is quite good. We have a stable economy, growing, albeit at a slow rate. I think it's quite welcoming for the investors, both foreign and local. And I would think an ordinary Uganda should be on the lookout for what is available for them to grab, because there are so many sectors that are open to both the local and the foreign investors.
So the local person, you mean anyone, or you really have a criteria of saying, okay, now the local person, for us we refer to this one as the local person, or it is general, a local person?
By local, I mean any ordinary East African citizen, because we've gone IAC, we've gone East African, it's no longer only Ugandan. So whether you're Ugandan, Kenyan, Tanzanian, as long as you're part of the East African community, to me, or to Uganda, or Uganda Revenue Authority, you're local. So you should be able to take part in the investments in Uganda. And what I would think should be a good idea for anyone to hope on is agriculture, which the Pearl of Africa is well known for. So anyone can go into agriculture because there are so many incentives around commercial farming, agriculture, agro-processing, that is processing agricultural products into finished products. And I think that's an area that any Ugandan or any Kenyan or any Tanzanian or any local person can be able to hope to, given that there are incentives that are both sectoral and general.
Now, to just take you back a little bit, what part do these incentives play in the planning phase of someone trying to invest?
Incentives play a lot of, they have a big role in terms of planning, because everyone gets into business to make profits, to make money, to have a breakthrough. And what better way to do it than have to know where to take advantage of, especially in terms of taxes. Because you see, tax has an effect on your profit, because the profits only come after tax. So when you're getting into an investment, you should be able to know that at the end of the day, how much am I getting out of this business and how much am I giving back to the government? So why are these very important is that you'll be able to tell that I'll break through this as opposed to the other, where there are no incentives and where they are. So the planning process is very important to do a lot of tax planning. Because if I'm going into an agricultural sector where I know that I'm going to have a 10-year tax holiday, I'm sure that in the 10 years, I will have made a breakthrough and I'll probably have made so many profits to keep me going and to now give back to the government by contributing to the tax.
Oh, that's nice. And our topic today, we shall be discussing about that domestic tax incentives available for the investor. Just the way we started, I've noticed, or many of you have noticed, that there is a trend that is going on. Everyone is trying to find a way of investing or something to invest into. Now, Tracy, I have a few questions that come to my mind. What are tax incentives? That in the simplest of terms, what are tax incentives?
Tax incentives, okay, to make it simple, because technically there will be more like concessions that the state or the government makes in a way that we are losing tax, but we are promoting investment or growth, industrialization or something like that. So they're basically advantages that are presented to the investor or to the taxpayer to use legally within the law to be able to invest, to attract them to be involved in certain activities.
Okay, so, and what part do they play in the planning? I know you've answered that, yes. But now that I have understood the importance and what the tax incentives are, so if I'm planning, let's say, I'm planning to set up a factory that manufactures toothpaste, let's say, and what incentives can I really look at that can really benefit me? Because I wouldn't want to invest and again feel like it's becoming a real burden onto my pockets and on my livelihood too.
Okay, for toothpaste, as a Ugandan, if you set out to invest into into manufacturing of toothpaste, there are quite a number of tax incentives that you should look out for. One of them is that we have general incentives. What I mean by general incentives is that they are applicable to every person, whether local or foreign or Ugandan or whatever. Those are common, and those ones would fall under what we call allowable expenses or allowable deductions. In that whatever you put in, you're allowed to deduct it before you're taxed. For example, the training expenditures, the scientific research, because for toothpaste, I'm sure you're going to do some bit of scientific research. Industrial, like if you're putting up a building, there's an initial allowance.
In which I'm going to be manufacturing
So you're allowed that deduction. Of course, there are percentages and there are ways of calculating that, which is a bit technical, but you allow deductions for that. Initial allowance, the industrial buildings, the research you're going to do, and every other expenses. So those are general. Then also, if you're going to put up this toothpaste factory, say in an industrial park, the industrial parks are gazetted areas. They are gazetted by the government, basically, where the people under that industrial park have certain privileges.
Do I need to apply to be able to get into the park?
Yes,
or
yes. You have to. You have to apply, and then you'll be gazetted to have an industrial park. But you can't be an operator in the industrial park. What do I mean by an operator is that if you set up your factory in an already established industrial park, we refer to you as an operator, and there are also tax incentives for that operator. And in all the three circumstances, whether you're inside the industrial park or inside a free zone or outside, you have a 10-year tax holiday, as long as you meet certain thresholds.
First pause it there. I have a 10-year
tax holiday. You don't pay any tax for 10 years.
Oh, we've had 10 years. I think we can take advantage of that too. Are they accessible to the local person? And what are the thresholds of this local person? How much is the match required for me to have such incentives available?
For the 10-year tax holiday, let me group this into three categories. We have the operator of the industrial park.
Okay.
If you're the owner, if you set up an industrial park, you're required to have a minimum of $50 million US. If you're not a local. What I mean by not a local, it means you're not an East African community citizen.
So despite you being a South African,
yes.
Angola, somewhere else, as long as you're not in the East African community, that's $50 million
US, you set up an industrial park. Okay. You have a 10-year tax holiday and so many other incentives on whatever you do, on your income tax basically generated from that industrial park. And then for the East African community members, it's $10 million US. For you to set up the industrial park.
For the East African?
Yes, you need that minimum to be exempt for 10 years. And then after setting up this industrial park, there are other individuals like you and I who would want to set up our factory inside that industrial park. Now, you and I will be looked at as operators. Now, that's the second category. For the operators, for the East African citizens, you need $1 million US. And then the others, by others I mean those outside East Africa, you need $10 million US. Now, once you get your $1 million US and set up a toothpaste factory in that industrial park, your income is exempt from tax for 10 years. Yes.
So my profits are safeguarded from
any
URA
tax, yes. At least income tax, you'll be exempt from income tax. And then there are also VAT. There's VAT, you have an incentive in regards to VAT. You will have exempt raw materials as long as they're locally sourced. Those will be exempt from VAT. The studies will be exempt from VAT, and so many other things.
I would like you to help us appreciate the exemptions themselves, because to my understanding, I understand there are VAT exemptions, there is excise duty exemptions. What are the differences, the major differences? Because someone will be asking, VAT, okay, when do I become exempt VAT if I'm to set up my factory? That is. If a person, let's say I'm manufacturing sofa sets, I'm manufacturing, let's say beds, tables, but before I even say that, is that person, does that person have any tax exemptions? Person manufacturing,
okay, maybe
if I'm able to manufacture that on a large scale.
Okay, let me put it this way. The way VAT operates is different. VAT actually applies to goods and services and not persons per se. So you may not have a person like you and I who is exempt from VAT, but rather you
if I own a company doing that.
Yes, but you'll have your goods and services being exempt from VAT. So basically VAT is on goods and services. So it depends on what you're dealing in or what you're providing. Let me give an example that if I'm dealing in medical sundries, let's say gloves, the VAT law would say that, okay, gloves, that is a good. Now, for you to know whether the gloves are exempt or standard rated, by standard rated I mean they attract VAT, you have to go to the second schedule. When an item is listed in the second schedule of the VAT Act, it means it's exempt from VAT. If it's not listed in the second schedule, it means it attracts VAT. Okay. Now, what the next step will be, okay, fine, this item, let's assume the gloves. Of course, the gloves do not, they attract VAT, yes, but at a 0 rate.
So it is the second schedule of the VAT Act.
Yes.
So whatever is not in the second schedule
attracts VAT.
Attracts VAT.
Yes. So I have let me go ahead with my example. When I check into the second schedule of the VAT Act, I do not find gloves. What does that mean? That there is actually VAT on gloves. So my next step is going to be, how much VAT do I have to pay on the gloves? So I'll have to look at the third schedule. Why am I looking at the third schedule? Because the third schedule lists items that have VAT at a 0 rate. So when I go to the third schedule, I find gloves there. So I'll know that, fine, the gloves attract VAT, but at a 0 rate. Now, if the item is not in the third schedule, it means that item actually attracts VAT at a rate of 18%. So that's how VAT operates. If the item is listed, it's exempt in the second schedule. If it's in the third schedule, it has VAT at a 0 rate. And if it's not in either of those schedules, then there's VAT at the rate of 18. The only time an institution or a person is exempt from VAT is when they are listed in the first schedule. Now, when you look at the first schedule, it literally lists international organizations that are donor, that give Uganda money, that give Uganda grants. Those are the institutions that are listed. Yes, USAID, World Bank, East African Development Bank, and the like. Those will be listed in the first schedule.
Okay?
Yeah.
Oh, that's enlightening. So if someone is in need of the excise duty exemption, what do they really do? Because I understand excise duty is tax levied on things that may literally be dangerous to society and people.
Excise duty is what we call a sin tax.
Sin.
HEB. HEB, sin tax. Okay. What do I say? It's a sin tax because it's imposed to deter people from consuming either a certain item or to control consumption of that item. You look at the things that are listed in the Excise Duty Act. We have things like cigarettes, plastic items. These items are either dangerous to society, to human life, or to the environment at large. So basically we're imposing it on, we're saying, fine, you want to consume this, you're going to pay a certain amount to be able to consume that. You're going to consume it at a cost. Now, there's not such a thing like an exemption on excise duty per se. The only incentives we have is to the manufacturers of these items, and they simply relate to setting up of their industries and the like. But most of the items that are listed in Schedule 2 of the Excise Duty Act actually have duty of a certain amount. The ones that have nil are either those that shouldn't have been there, or we are trying to level ground.
Oh,
yes.
Because what was really moving in my mind is if a company is processing chemicals, they can't be excise duty exempt.
No.
They can't?
No.
Now, my question is, if I'm manufacturing medicines, I'll need to be using chemicals of a sort. So that takes me back to the sector of medical manufacturing and so on and so forth. So how does that work out?
Currently what we have is what we call a remission. We give a remission if, say, you are exporting a certain percentage, or you're using, if you look at the plastic sector, if you're recycling and using above 20% recycled materials, we'll take note that actually you're paying attention to the environment and you're trying to be careful with what you do. Then the Commissioner General can give you a remission. But upon verification that you've actually used over 20% recycled material. Now, a remission can either mean that we are going to, it's more like we're doing away with that excise duty, but what happens practically is that we can refund. We refund the duty that you have paid. We'll still require you to file a return and then look at the duty that you paid, and then we can remit it. We can either ask you not to pay it or...
Okay, why would I refund? Why would really URA refund that, knowing that the chemicals that they were dealing with actually were harming the environment?
Now that's the incentive that is available for excisable goods.
Okay, so As we go on with this webinar, please feel free to push in any questions. We shall be gladly answering them. And our guru here is ready to answer every single question that you put across. So as we go on, in the next few minutes, we'll be having a Q&A session. Please prepare your questions and feel free to send them in. So, the stamp duty.
Yes.
I understand it's a tax on intangible, is it, how do they call it? I've sold my piece of land, you know, those things. The exemption, how does that exemption work?
The exemption with regard to stamp duty, first of all, stamp duty is basically on instruments. You pay duty on an instrument to give it power, to give it
authenticity,
effect, to give it authenticity. So it's literally to bring into force a certain instrument or a document. So the instruments listed in Schedule 2 of the Stamp Duty Act basically have a duty of a certain rate specified there to apply to them. Now the incentive is literally for what we've called investors. Now those investors don't pay duty on transfer of say land where they're going to put up their plants, manufacturing plants. Then you find debentures where they're probably processing loans. There will be no duty on that. Then also the increase in share capital, which is required to have a stamp duty paid, that too can be waived. Those are some of the incentives for stamp duty. Yes.
Okay. And investment quality, let's say, how does URA come up with the mechanism of knowing that this person going to invest in this, he provides such quality? Because we see very many people producing the same thing and so many people still asking for the same exemption. So how do you really differentiate and say, okay, we can come like 4 investors, we all have $300,000 we want to invest. But how do you differentiate to say that this one we shall give, this one we shall not give, the other one we shall give?
For a fact, there's no way URA can tell in terms of quality of which investor is going to give a certain level of quality at that point. What we do is that we receive applications from the various investors. When we get the application, our duty is to look at if the investor meets the requirements of the law. I'll go to the specific provision under which the investor is seeking this incentive. Let's take, for instance, if it's Section 21 AF, and is this investor in those sectors that are listed in that provision? If, say, the person is doing agro-processing, my duty is to confirm that this person is actually doing agro-processing. And if they're in agro-processing, do they have the $300,000, the $1 million US dollars, the $50 million US dollars? And how have we been doing this is that we ask them to give us proof of finances. That can be either through their bank account, through loans, because most of them get loans to set up these factories, and then the machinery. Sometimes we inspect to find out the machinery that have come into the country, because even those are duty-free at the point of importation. If you're doing that, if you're carrying out that for the first time, if that machinery is coming into the country for the first time, you don't pay duty on it. And even the VAT is deferred on the machinery and all that. So if I confirm that this investor actually has the capacity in terms of financials, or we also ask for project proposals. We ask them to give us their project proposals and a plan, and we see how this is going to be phased out. How long is it going to take for the investor to set up the factory? Because like you've said, people who come with very beautiful ideas, you grant them the exemption, and 1 year or 2 years down the road, there's nothing on the ground, and they have probably even exited the country. So you need a project proposal, then you study it and look out. But if someone has all the requirements under the law, we actually grant them that exemption, irrespective of whether we are not sure of the quality or not, because also that has to be done by UNBS upon commencement to prove that they meet the standards.
Okay. Ladies and gentlemen, we are still discussing the domestic tax incentives available for the investors, and there are some few questions that are coming in. Rogers on Facebook is commenting and saying that tax methods and implementation in Uganda by URA needs to be revised current methods scare investments. What do you say about that?
If I get him well, he seems to say that the methods we are using to encourage investors are scary. I'm not sure where he's coming from. One thing I'm aware of is that most Ugandans actually fear to apply for these incentives. That's what I know. You find that most of the people who are applying for these incentives are the non-locals. Let's say the Indians, the Chinese, people from the Netherlands, and it's quite heartbreaking to see that our Ugandans are not interested in placing the application. So I don't think it's with the mechanisms that URA has per se, because these exemptions are in the law. They're statutory exemptions, they're statutory incentives. So it's the taxpayer to take on their right and apply for the same.
So because according to his question, the amount of money required for someone to make an investment, let's say a normal Ugandan, if you tell me $300,000, is there any possibility in the future that such amounts will ever reduce to cater for the lowest person down to be able to have very huge investments?
Just for
because
information.
I understand there are some people whereby they really want to avoid borrowing from banks to invest. And some Ugandans have really taken initiatives to save up their money to have these investments. So is there any possibility that in the future the money will come down so that these people can also get into the field?
Yes, that is true. Actually, if you notice, the monies have been coming down. $300,000 is a recent amendment. As recent as 2 months ago, it's the most recent, because we came from $10 million US, $1 million US, and now we're on 300, which is, let's be realistic, 1 billion should be something a serious investor should be able to put in to have a 10-year tax holiday. I'm looking at 10-year tax holiday, but that doesn't mean that we don't have tax incentives for people who have less than that. You don't have to have the 10-year tax holiday. You can actually take benefit of these other tax incentives, the general ones, the sectoral ones. We have those that cut across.
What are some of those?
For instance, if you're employing people with disabilities, that is an indefinite tax incentive. You just need 5% of your staff to be people with disabilities, and you have 2% income tax deduction for as long as you're operating. Yes. And then also you can take advantage of, okay, for the NGOs, not many can be involved in NGOs, but NGOs also have indefinite tax holidays as long as you have a private ruling or an exemption from the Commissioner General. You can use that indefinitely. Then there is the new baby on the block, oil and gas. They have indefinite tax holiday, indefinite, as long as you invest in there. And maybe that is so big, I don't know, but there are small services that Ugandans can provide.
Isn't that, if you say like oil and gas, if you say that their tax incentives are indefinite, isn't that causing a risk to the economy? Let me say, we might be losing a lot of money in that, as I might see.
I don't think so. And like I said at the start, tax incentives are basically concessions that the government is looking at. What are we doing here? We are promoting investments in that sector to bring it on board, because we can only tax it when we have it. So we need to give life to the sector.
The keyword was indefinite.
Yes, it is going to be indefinite until we get to a standard where we can now.
Wow, my fellow Ugandans, you've had that. More questions are still coming in here. And what incentives are there for local individuals who are interested in investing in Ugandan Security Exchange? Are their returns taxed heavily like other sectors, let's say real estate? If there are incentives, we do not know them. Please shed some light. Okay, we are going to go one by one. This has been an anonymous attendee asking that question. Let's start with his first question. Are there any incentives in regards to the security exchanges?
Okay, for security exchanges, what I know is that you'll be earning in terms of dividends. And the law on dividends is that they withhold when they're paying the dividends, they withhold. And we all have to appreciate that that withheld tax is actually a final tax to a certain extent. And if you can declare and account for it, better still as a taxpayer. And why am I saying this? There may not be, let's say, direct incentives per se, but the tax is basically on the profit. You're looking at, no one is tampering with your investment capital and all that. And also that literally you're having a risk-free investment. So the least you can do is pay a little to the government. Yeah.
Okay, so, and he added, are their returns heavily taxed like other sectors? They mentioned the real estate business. We shall get to that, but... Okay,
I can't say they are heavily taxed because the tax rate in Uganda is literally the same, 16%. Yeah? Corporation tax is 30%, but the effective tax rate is 16%. When you come to individuals, the effective tax rate is 12%. So there is nothing like being heavily taxed because the effective tax rate is the same.
So that we go back to the other notion that if everyone pays a little, no one has to pay more. And Peter Sentongo, he wants some clarity on the excise duty and the incentives around it. Peter, we had talked about it, and I think she will throw more light on it. Excise duty is the tax levied on the would-be dangerous goods to society, environment, and you, the taxpayer. However, she noted that there is a refund, right? Yeah, a remission that is given after some time. You can add on that.
Okay, for excise duty, the law provides for a remission or a refund, and this is with specific sectors. That is plastics. If you deal in plastics and you have a recycling plant, to encourage recycling, the law provides that if you have 20% of your raw material as recycled material, you'll be given a remission, meaning that tax is literally either waived or if you've paid it, the commissioner will refund it to encourage you to recycle, because we believe that recycled materials are better to the health of the Ugandans as opposed to non-recycled materials. Also, recycling is good generally for the environment, internationally and worldwide. It's a welcome idea. So we're encouraging investors to recycle, and by doing that, we needed to give them an incentive to do that so that our health is safe. Then for medical, if you're producing something for medical purposes, there's also an available remission for that. Like, whereas the chemicals probably involved in the manufacture of these medicines may be dangerous to the environment, but then we need a medicine as well for us to have our hospitals running well. There you get a remission. Then also if you're producing packages for export of fish or other products, you also have a remission. It's also one of the items that the law allows the commissioner to remit. And there are a lot of remissions at export. If you manufacture for export and meet a certain percentage, 80%, on top of having a remission in terms of excise duty, you don't pay income tax. You have an indefinite tax holiday. If 80% of your products are exported out of Uganda, you have a tax holiday and it's indefinite. So all you need to do as a manufacturer is manufacture and make sure 80% of your products, finished products, are exported.
So it's like you are encouraging taxpayers to invest into businesses where they are able to export more.
Exactly.
Oh, that's wonderful. Then he added, the agents, are there any agents for VAT withholding? And what are the incentives around that too?
VAT withholding actually was brought about to be able to tap into information, people who supply and we can't see them in the chain. You remember there was the VAT, the invoice trading, the fraud. We found a lot of missing traders. So in the process, we had to come up with mechanisms to know that if I, Tracy, sold something to Jonathan or to Joram, can I identify who Joram is? Because if I sold it, what happens if I sold it to a one Peter? I might decide to not mention that I bought it from you, and you're probably a final consumer. Now we lose the chain along the way. So what this is meant to do is that I should be able to know that if Joram supplied me, I withheld a certain percentage of the VAT he should have paid. So then you or I should be able to reach out to you to say, look here, Tracy withheld 6% of your VAT. Can we have the 12? So it was basically to curb the loss of. And then for VAT withholding agents, all VAT registered taxpayers are required to withhold.
Oh.
Yes. But there's also an exemption because we know that it curtails cash flow for the business community.
Yes.
So most of the compliant taxpayers are actually exempted from being from withholding VAT. And we do this annually. There's a list for both income tax and VAT. We have a list of those who are exempt from the 6% withholding tax and the VAT withholding. So those lists are done annually. I think the list comes out every 1st of July and it runs to 30th of June of the next financial year. And this is one of the incentives for being compliant. So if you are a compliant taxpayer and you're contributing to the revenue, we actually give you that incentive so that you're not disturbed.
So ladies and gentlemen, in some way I believe that as Ugandans we still have an obligation and duty to pay our taxes. It may seem a little bit hard, like someone once said that tax is the penalty we pay for being civilized, and it kind of helps our economies and our societies to keep growing on and on. Please keep the questions coming in, and I believe we shall have them answered. Now, Tracy, there is something that was talked about in one of the engagements that I attended recently. There are investors that, how is URA planning to curb those investors who invest in one thing, when they get the tax holiday, in order to extend it, they say that they have invested again on in the same thing so that they get another tax holiday, as in, let's say someone has constructed a factory for toothpaste. And then after constructing that factory for toothpaste, he will tell you that he has again started another factory of medical sundries. How do you curb such things? Because it may be the same person and you find that some of them just twist names so that they continue getting this holiday, and in the long run Uganda loses. Okay,
I hinted on that before or earlier. The law does not stop one from doing that. It's part of what we call tax planning, and tax planning is legal. And also you notice that this person is venturing in different sectors. What are they doing? They're actually growing the economy. It's called industrialization. If I have a factory of toothpaste and I have a tax holiday and then I start another business, you see that this person is growing, and that's what we're looking at. We're looking at expanding industrialization in the country. And the law actually grants this exemption. So we can't deny the person the exemption on the ground that they already have a tax holiday on the other person. Then the law currently actually grants another tax holiday on additional investment. Let's assume that person actually added more income into the toothpaste industry. They allowed another tax holiday, but that will only relate to the additional investment. If, say, they added another 20 USD million in the toothpaste industry, now the tax holiday will start from the date on which they get an exemption on the additional investment. If, say, they got that additional investment ruling today, the tax holiday will start this financial year. Now, what does that mean is that when they are filing their return, they will have to separate profit or income made from the old investment from the income that is going to be made out of the additional investment that they have made. The law clearly specifies. Now, the only time where we had, it's the agro-processing industry, where we don't provide for taxpayer to benefit if they're in the same line. Say if you have a sugar factory in Mayuge, and then you have another one in, say, Kasese, then you have another one in Gulu. That is the same sector. So when we get to know that you're the same person, you're not doing this for the first time. You already have a sugar factory. So there we will not give you the second exemption. We'll only give you one, the first one.
Okay.
Yes.
Okay, you talked about incentives to the smaller person.
Yes.
What are some of those? Because someone has really taken us back, and they want you to shed light on those incentives for a person who is way less than, let's say, $100,000 US, $50,000 US.
Okay, for the person who is way less than that, you take advantage of the general incentives. Like I said,
and
one,
what could those be?
those are the allowable deductions, because you allow the expenses in doing business, the cost of sales. Whatever you're buying, you allow that as a deduction so that it doesn't eat into your profits. Then you also allowed 100% of scientific research. If you're doing any scientific research, that is available, irrespective of how small, even if your business is 5 million, if you're doing any scientific research, you're allowed 100% of that expenditure. Then we look at initial allowance, basically. You don't have to have $1 million US. If you've started up a business, whatever you've put in initially is allowed as a deduction. And that also cuts across. The other one is the 6% withholding tax exemption. As long as you're compliant, it doesn't matter how much you're putting into this business. If you are a compliant taxpayer, you will be allowed that 6% incentive.
So for someone like Dax who has a business of 2 million profit per month, if they are compliant,
yes, they can get the withholding tax
they can
exemption.
get the withholding tax exemption.
Exactly.
Please
then
go ahead.
Okay, I don't know if aircraft operators can fit in that example, because I think the industry itself is expensive by the nature of what it does. But in case you're dealing in anything aircraft, either you're leasing, you're operating, you have an indefinite tax holiday for everything to deal with that. Then, like I said, you can also try to employ people with disabilities. That should be easy. Get 5% of your employees as people with disabilities, and you will have a tax holiday. Then set up a vocational institute. That is something that anyone can do. Look at the fabricators. How many do we have on the road?
So it's a matter of them turning that into a vocational institute.
Yes, then they will have the tax holiday. Because all you need, all the law is telling you is that can you employ over 70% of Ugandans? How many fabricators do we see that are not Ugandans on the road? Can you have 60% raw materials from Uganda? We notice all these raw materials is from the likes of roofings, steel and tube. So they actually just do not apply for these exemptions, but they're all over the place.
So someone has questioned, what is the process of applying for these exemptions? Because it looks like now they are getting interested into applying for those smaller incentives or for those other incentives, because it seems that, like I said in our previous conversation, that most of these are way beyond most Ugandans' thresholds. So they are getting interested in knowing how can they apply for these incentives.
Okay, for the general incentives, you don't even have to apply. As you file your return, you just put in your expenses and state this was the cost of sales, this was scientific research, and it will be allowed in the return. And if there is any issue, the auditors will be able to reach out to you and ask you to probably bring evidence. That's if there's an issue. Now, for the tax holidays and the annual ones, the renewable ones, say for the NGOs, those in agro-processing, those that are annual, you write to the Commissioner, Domestic Taxes, and usually that letter will be trickled down to the Assistant Commissioner Business Policy, who will also trickle down to the relevant officers in the office that will look at it, call you in case we need further information to consider, maybe carry out an interview, an inspection of the factory or your place of work, and where all requirements of the law are met. The letter will be given to you. The exemption will be signed by the Commissioner of Domestic Taxes, exempting you from tax for the specified period. If it's 10 years, it will state 10 years. If it's 1 year, it will state the financial year. And of course, there is usually a disclaimer where the facts turn, where the position turns. because we do annual inspections of the people with the tax holiday. So if we notice that after 2 years of granting you the tax holiday, the factory actually closed, then that exemption cannot stand.
Okay, my fellow Ugandans, now we have known that even me, a fabricator, I can really expand the scope at which I'm doing my things. I can just, you've said, turn that into a vocational institute where I teach my fellow Ugandans. As we realize, some of the jobs are really becoming hard to get. So that would be a very good investment for all fellow Ugandans. And as we're coming to the close and the end of our webinar, I'd like to thank everyone that has been able to attend and to tune in into this webinar. It has been a great experience. Thank you, Tracy. And we hope to host you more often, because questions on taxation have never ceased. They always come in at all times. And please be free to just contact URA wherever you can. You can go to WhatsApp. You can contact us through Twitter. You can contact us through all platforms. Send in your questions. They will all be answered. Thank you, Tracy, and thank you for your time, for having us, or for being here with us. And I want to thank you, our viewer, for being present in this webinar, and thank you for the questions. Thank you so much for joining us. We wish you a very beautiful day. Have a nice time.
Couple, you seem to be in a hurry. Where are you going to?
I'm gonna pay URA visit.
Why would anyone visit URA? Of all places?
To know more about the Kakasa Business Solutions, namely Digital Tracking Solution, the Voluntary Disclosure Program and Electronic Fiscal Recepting, and Invoicing Solution, which have turned my business around. You know I need to be on top of my game to protect my empire. If you know, you know.
I too need to know what Kapo knows.
Kakasa, be sure you are in charge of your business. Uganda Revenue Authority, developing